Hi everyone, my name's Jordan. I'm the Chief Reporter at Building and I'm going to be hosting today's conversation about IR35 tax changes. With the new rules coming into effect in April, the coming weeks are going to be critical for companies in the private sector and who rely on subcontractors and freelancers, particularly in construction. So I think it's a really important time for us to be having this conversation. As such, we thought it'd be really great to bring together a panel of experts to talk through the changes and answer any questions on the new operating legislation. So I guess on that note, it would be really great to introduce our panelists for today. Our first speaker is Jessica Jensen, who's Product Manager for Compliance at Sage. Jessica will be followed by Matthew Sharp, a Director at Field Fisher, while our panel is rounded out by Anthony Edwards, Head of Pre-Sales at Equi2. Each of our panelists is going to run through a 10-minute presentation covering off some of the key issues surrounding the upcoming changes. And then we're going to throw open the doors to questions from the audience. So please have them coming through as we go along. We'll try and cover off as many of those as we can. Just before we jump into the speakers, it'd be great to just gain some insight into our audience so that we can cover everything off for you guys. So I'm just going to launch a quick poll question. If you guys wouldn't mind answering, that would be fantastic. So yeah, as I said, each of our speakers is going to give a brief presentation and then we'll have a more free-flowing Q&A conversation. So if the audience would be happy to send through those questions as they come up, that would be great, because then we can start preparing to get as many of those covered off as possible as we go. Okay, brilliant. Okay, so I guess without too much more from me before we kick things off, I'm going to hand it over to Jessica, who's going to be our first speaker. So Jessica, I'll just give you the Meet Presenter and we'll hear from you.
Thanks, Jordan. So first off, just want to apologise for my background, which you can see we're just in the middle of decorating. Okay, so I just want to kick the session off really by talking a bit more high level about what IR35 actually is and how it works today. And then we'll obviously look at what's going to be changing. And once we've looked at this, we can take a deeper look at the responsibilities of each party involved, how you can prepare, and then I'll be handing over to Matthew, who will look at the application of IR35 specifically to the construction sector. So first things first, what is IR35, or off-payroll working rules as they're sometimes called? Now, the first really important point, which I'm sure most of you already know, is that IR35 isn't a new thing. The legislation, has been around for years, really. And the rules are relevant for those workers or contractors who provide their services through an intermediary. And these intermediaries are usually in the form of a limited company referred to as a personal service company or a PSC, which is controlled by the worker. And the IR35 rules essentially ensure that the worker pays broadly the same tax and national insurance contributions as an employee, if that worker would have been classed as an employee had they been contracted directly. And when we say client, that's the business that uses the contractor. Now, there's obviously kind of a lot of terminology here, so let's just kind of talk through simple examples. So let's say I'm a contractor and I provide my services through Jessica Jensen Limited, which is a personal service company that I've set up. And the businesses that I contract for, so my clients, are invoiced by Jessica Jensen Limited, and then I extract money from Jessica Jensen Limited, either through a salary or dividends. And the problem with this, and the problem that IR35 is trying to solve, is that working in this way means I might pay less tax overall than if I were employed directly by my clients. And this is fine if I truly am working like a self-employed individual. The problem is when I'm not, and actually the nature of the client contractor relationship is in essence one of employment. And this comes down to, you know, factors like how much supervision, direction and control your client has over your work. So for engagements where I'm determined to be a deemed employee, IR35 kicks in, and an adjustment needs to be made to ensure that I've incurred the right amount of tax. So what's actually changing from April? Well, the IR35 rules themselves are going to remain largely unchanged. What's changing is how IR35 is administered and who's responsible for applying the rules. So today, for engagements with clients in the private sector, the worker's intermediary is responsible for determining the employment status of the worker. And if the worker is considered to be a deemed employee for a particular engagement, then the intermediary is responsible for ensuring that that worker has paid the right amount of tax. But for engagements with clients in the public sector, the client is responsible for determining the employment status of the worker. And if that worker is considered to be a deemed employee by the client, then tax and national insurance would need to be deducted from the worker's fees before being paid to the intermediary. And we'll take a look at that process in a bit more detail in the next few slides. So let's just take a look at how all of that is going to change from April. So from the 6th of April, medium and large private businesses are going to be responsible for determining the employment status of the worker and potentially adding the worker to the payroll. Or in other words, medium and large private sector clients will now have to follow the same rules as public sector clients do now. Now, small private sector businesses are exempt from these changes, so contractors working for small clients will continue to operate as they do today for those engagements. So just a quick overview of what small is, or rather what isn't small. And the definition broadly follows the Companies Act definition, which is to say that you're not small if you meet 2 or more of the following criteria. So you've got annual turnover of more than 10.2 million, you've got a balance sheet total of more than 5.1 million, or you've got more than 50 employees. But the guidance also outlines a simplified test for businesses that aren't companies or LLPs, which only looks at that turnover criteria in a calendar year. So we know that if you're a medium or large sized private business using contractors who work through intermediaries, you're now going to be responsible for determining the employment status of your workers. But what happens if you determine that those workers are in fact deemed employees? So we know that tax and national insurance need to be deducted from the fees, but whose responsibility is that? So there's actually another role in the ecosystem known as the fee payer. And in most cases, the fee payer is responsible for deducting the tax and NI. So we'll just take a closer look at who the fee payer actually is. So the fee payer is the party that sits directly above the worker's intermediary in the labour supply chain. So it's the party that pays the worker's intermediary. So in our simple setup from the previous slides, the client would be the fee payer. But the labour supply chain, as I'm sure many of you know, is sometimes a bit more complex and could involve other parties. So here we've got an agency. Or perhaps multiple agencies, but regardless of the number of parties involved, the fee payer will always be the party directly before the intermediary. And one important thing to point out is that while the client needs to be medium or large for these new rules to apply, the fee payer doesn't. So, if you're a small agency involved in supplying contract workers to clients, you might still be impacted by these new rules. Now, the responsibility for deducting tax and national insurance relies on the fee payer meeting some qualifying conditions and having received a status determination, which we'll look at on the next slide. So if either of these conditions aren't met, the responsibility for deducting the tax and NI will transfer to the next party above you in the labour supply chain. So, for example, in the middle scenario, if the agency hadn't received the status determination from the client, the responsibility for deducting tax and NI will fall back to the client. So that's kind of the different roles involved in IR35. So now we'll just take a look at the key responsibilities of the client and the fee payer. So as a public sector or medium-large private sector client, what do you need to do? Well, you're going to have to decide the employment status of every worker who operates through their own intermediary and prepare what's called a status determination statement. And that's essentially a document that confirms the status of the contractor. And you can use the government CESS tool to help you make these determinations. Now, in order to do this, you're going to have have assessed your workforce to understand which contractors work through intermediaries and therefore fall within the rules. And then the next important point is that you'll need to ensure you've shared that SDS with the worker and the next party in the labour supply chain. And this is absolutely vital, because if you don't, and IR35 applies, you may find you become responsible for adding the worker to your payroll, even though you aren't the fee payer. And the SDS will continue to be passed party to party until it reaches the fee payer. And this is absolutely kind of paramount to the process working. Then as the client, you're also going to need to keep detailed records of the determinations made, including your reasonings, and have a process in place to deal with any disagreements that arise off the back of those determinations. And just to note here that while small private sector businesses are exempt, they still need to be able to confirm their size if they're asked, so that other parties in the labour supply chain can determine what rules apply to a particular engagement. So assuming responsibility hasn't passed to another party in the labour supply chain, the fee payer, who may or may not be the same business as the client, will be responsible for including the workers' fees on the payroll and deducting tax and national insurance. But they're also going to be responsible for paying the employer national insurance contributions on those fees. So there is an added cost involved. And the tax and national insurance will need reporting to HMRC on real-time information. So there'll be a new RTI flag available to indicate those entries that are off-payroll workers. And then the intermediary needs to be paid their fees net of the tax and the employee NI that's been deducted. And just to note here that along with the worker, the fee payer also has the right to challenge a status determination if they think it's wrong. So what does all this mean for the contractor and their intermediary? Well, there isn't any new information on this slide, but from their perspective, they're going to need to understand what rules apply to what engagements. So for a private sector client, that's also going to involve understanding the size of the client so they can work out what rules apply. And just to note here that any amounts that have been received that's already had tax and NI deducted at source won't then need to be taxed again by the intermediary or the worker, so they won't be double taxed. So it was kind of a whistle-stop tour, but hopefully you can see why it's really important to understand the role of your business so that you can understand the implications. So are you a client? And if so, what size are you? Are you the fee payer? Are you a contractor working for medium, large private sector businesses? And HMRC have provided a lot of kind of supporting materials for affected businesses through guidance and webinars and fact sheets. And the best place to start in terms of navigating that help is the address that I've just popped on the slide. So gov.uk/guidance/help and support for off-payroll working. And the last thing that I just want to touch on is HMRC have recently announced their approach to compliance with the new rules. And while kind of deliberate non-compliance isn't going to be tolerated, HMRC have confirmed that they won't impose penalties for errors in applying the new rules in the first 12 months of application. So yeah, hopefully that's given kind of a good overview of the changes. And at this point, I'll hand over to Matthew to talk a little bit more about IR35 and the construction sector.
Thanks so much for that, Jessica. That was a really great start. Matthew, I'll now hand it over to you so that you can share your presentation.
Brilliant. Brilliant. Hopefully that's all come through okay.
Yeah, that's perfect.
Hi, I'm Matthew Sharp. I'm a director in the tax group at Field Fisher. And today I'm going to look at the interaction between IR35 and CIS. So taking what Jessica's just said and showing you how that operates in practice. So as Jessica has just explained, IR35 itself has 4 key ingredients. So you need an individual providing personal services through an intermediary for an end client. Those key criteria are really important to keep in your mind as we go through this next section. But before we turn to the interaction between IR35 and CIS, just a quick reminder as to what CIS is all about. So construction industry scheme, contractors, and I'll explain in a minute what contractors have to deduct money from subcontractors' payments. It's a tax collection mechanism and pass that on to HMRC. Contractors must register for the scheme, subcontractors may register for the scheme, and as explained on this slide, there is a financial incentive for them to do so. And that's because if subcontractors are registered for the scheme, they can the rate of deduction that's applied by contractors is 20%. If they're not registered, it's 30%. And certain subcontractors can also register to receive gross payments, so i.e. no deductions at all. And those deductions count as advance payment towards the subcontractor's tax and national insurance payments. So looking a bit more at the concepts, contractors and subcontractors. So a contractor is a person who pays subcontractors for construction work. I'm sure you're all very familiar with this, that the terminology is extremely wide. It doesn't just include people who are involved in construction work. A party whose business does not perform construction work but spends an average of more than £1 million a year on construction in any 3-year period, they're also caught by the rules. A quick point to flag here, this terminology is currently under consultation to be changed, possibly over the next 12-24 months, so just keep that in mind. A subcontractor, that's essentially any person who performs construction work for a contractor. Again, really wide definitions there. So with the reminder of what CIS is all about done, let's have a quick look at the interaction between IR35 and CIS. So general rule first, IR35 takes precedence. You always look at IR35 first, and IR35 is the key obligation. CIS comes second. There's an extract here from HMRC's Employment Status Manual, which says where payments are subject to PAYE under the new rules, you do not need to consider the construction industry scheme. The key bit there is where payments are subject to PAYE. So going back to Jessica's presentation a minute ago, you'll remember that there's effectively 2 parts to an IR35 test. Have you got, first part, have you got an individual providing services personally through an intermediary for an end client. That's limb 1. If you've got that type of contractor, then that's limb 1 ticked. Limb 2 is that contractor working effectively as an employed person or a self-employed person, ignoring the structures that are in place. If that person is employed, then you have to apply PAYE under the new rules. The key bit here is subject to PAYE. So if you have a contractor who is caught by IR35 because they are an individual personally performing services through an intermediary for an end client, but they are self-employed, then you need to consider CIS. The only circumstances when you don't consider CIS is where tax is being deducted under IR35 under the PAYE regime effectively. So the easy way to think about this is tax is always being collected. It's either being collected under IR35 or CIS. There shouldn't be circumstances where that money isn't coming into HMRC. If the new rules do not apply, then the party receiving the workers' services must then go on to consider CIS, and we'll look at some practical examples now. So Jess mentioned in her presentation the small company exemption. So end clients with a turnover of less than 10.2 million, less than 5.1 million on the balance sheet, and less than 50 employees, meeting 2 of those 3 criteria. That's a small end client, and it means the current IR35 regime applies. So where IR35 compliance is the responsibility of the worker and their personal services company, it's not shifting to the end client and the fee payer. So if that is the regime that applies to you, then you need to consider CIS. Looking at circumstances where IR35 does apply, so scenario 2 on the screen, so you've got here an employed status determination. So you've got those 2 limbs, you've got an individual personally performing services through an intermediary, and you think they look more like an employee than self-employed. So in these circumstances, IR35 must be considered, and the rules that Jessica just talked about must be applied. That means, though, you're applying PAYE, or the fee payer is applying PAYE, so you do not then need to consider CIS. There is a small exception to that, which I'll come on to in a second. Workers within the scope of IR35, so again, and sorry for labouring on this, you've got an individual personally performing services for an end client, but the determination is self-employed. So in those circumstances, IR35 is considered in the first instance. You apply the rules and you see that actually they're self-employed, so you'll then back out of IR35. So in these circumstances, you need to consider CIS. Let's look at this in slightly different ways. So looking at the labour supply chain, and this is a very similar example to the one that Jessica touched on a minute ago. So you've got a worker, Matthew Sharp, working through a personal services company, Matthew Sharp Limited, for a subcontractor, and then on for a main contractor. So not your standard 3-party situation, but one where there's another entity in the middle. I think Jess used the example of an agency. Here I've got a subcontractor on screen. Same kind of setup from IR35 perspective. So looking at IR35 first, the first thing and the most important thing is, as Jessica said, you need to audit your labour supply chain and identify who's who under the IR35 regime. So we've got a worker, so tick 1, there's a worker. We've got an intermediary, the personal services company, Matthew Sharp Limited. We've got 2 people above them in the supply chain, the subcontractor and the main contractor. Applying the general rule, the subcontractor is the entity sitting immediately above the personal services company, so they are the fee payer. As just mentioned, there's some exceptions to that rule where there's entities involved offshore and things like that, but the general rule is it's always the entity immediately above the personal services company. And then sitting above them is the main contractor. And we say here they are the end client. Again, this is another really complicated topic that I could spend the best part of 30 minutes discussing. In this labour supply chain, there will be a question as to who is the end client. Is it the subcontractor, the one with the fee payer label above, or is it the main contractor? And the question there is whether who the worker is providing their services to. If there was an employee relationship, who do they most look like the employee for? Is it the subcontractor or is it the main contractor? We'll assume here it's the main contractor. So so there you go. You've got all your labels from IR35 perspective. Let's just contrast that with CIS at the bottom of the screen. So here you've got the main contractor who is clearly a contractor. You've got your subcontractor. That subcontractor, as I said before, could be both a contractor and a subcontractor under the CIS regime. So they could be having deductions made on payments to them and having to withhold payments on to the personal services company, who is also, as you'll see on screen, a subcontractor. So for this particular worker, you could see IR35 in some ways as a simplification, because under CIS, you've got deductions being made by the main contractor, the subcontractor, and then obviously the personal services company receiving the monies at the end of the chain. Under IR35, everybody's got a role. You've got your end client, who's the one doing the status determination, and you've got the fee payer as the one making the deductions. So, as I say, in some ways, a slight simplification. For those sitting and worrying about compliance burden that comes with IR35, the paperwork that goes with it is entirely manageable. And if you can get to grips with CIS in terms of providing worker statements and everything else, then you can absolutely get to grips with IR35. It's just another regime, but the paperwork levels are very similar. So finally, to my top tips for dealing with IR35 for the construction industry, the most important thing, more so than for any other sector, is audit your supply chain. You need to know exactly which regime you're in. Are you in IR35? Are you in CIS? You need to understand who's who throughout the structure. If once you've done that, IR35 first. If IR35 doesn't apply, then it's CIS. So if IR35 applies, you need to complete the steps discussed by Jessica. So status determination statements, passing the message down the chain, looking at the deductions, all of the stuff that Jessica touched upon. If IR35 doesn't apply, then you need to check the CIS position. Do you need to be making deductions under that regime? And this is a very critical point. Consider what changes may need to be made in the future. So two examples. If you are under the small company exemption, keep in mind that small company exemption might go away if the end client's turnover goes above 10.2 million, for example, or more than 50 employees. You need to keep this under constant review, and also keep under review the fact that different contractors may come on board in the labour supply chain, and things may change over time. So it's really important that you keep this under review regularly to make sure that everything is in order. That's it from me.
Brilliant. Thank you so much, Matthew. That was really, really great. I'm sure that would be very helpful for everyone. So finally, our last presentation is going to be from Anthony. I'm just going to make presenter now.
Thanks, Jordan.
And yeah, so we'll hear from Anthony, and then we'll have the Q&A. There's plenty of questions already coming in, but please make sure you keep firing those over to us.
Brilliant. Can you see my screen okay there, Jordan?
Yep, that's fine. That's perfect.
Perfect. Hi, everybody. Just a quick introduction to myself. My name is Anthony Edwards. I head up the pre-sales or product specialist team here at Equi2. Previously worked at Sage for 5 years, providing technical support on accounting and payroll solutions, and essentially helped customers to adopt business management solutions such as Sage 200. More recently, and for the past 8 years, I've worked with Equi2, solely with the construction, contracting and house building sectors, helping companies with digital transformation and adoption of industry specific software to help streamline and automate key business processes. Essentially, I love helping companies to adopt great software. At Equi2, we specialize in the development, deployment and support of software specifically designed for the construction, contracting and house building industries. We've got a range of vertical solutions which take companies through the entire project life cycle, from estimating to commercial management and back-end accounting. We have the honour of having the largest customer base in our sector, growing rapidly even during these troubling times, and we work very closely with Sage to provide a best of breed fully integrated solution. Essentially, Sage provide market-leading accounting and payroll knowledge, and Equitu provide the construction industry expertise. Think of us as a default subcontractor, if you will. So Jessica and Matthew have provided us with a great insight into what IR35 means, and more specifically what this means for the construction industry. I'm going to talk for a few minutes today about how this could be managed from a practical software viewpoint. I must stress this is not legislation advice, and other software solutions may choose to manage IR35 differently. But on this slide, we have roughly detailed some of the key financial and operational processes a construction company must control to ensure successful delivery of projects. That will include things like job costing, managing your supply chain, including subcontractors, tracking your plant and equipment hire, approving purchases, timesheets and payments, right through to creating regular management reports such as CVRs. Equitu provides solutions for all of these, including management of subcontractors with online CIS verifications and submissions, as well as employee timesheets. And this information is then passed from Equitu to Sage's back-end accounting and payroll systems, such as Sage 200 and Sage 50. As highlighted here in yellow, these processes are obviously topical in today's conversation. And essentially with IR35, we need to make a decision as to whether to process somebody as a subcontractor or as a deemed employee. To simplify things a little bit, here we'll just outline 3 potential scenarios, simplified scenarios, I must add, depending on how you trade with your subcontractors and the ruling as described earlier as to whether you should treat your subcontractor as inside or outside of IR35. The key here for us is to have 2 separate ledgers, one used specifically to manage subcontractors, where CIS is to be processed, and another specifically to manage employees or those to be processed via payroll, including subcontractors inside the IR35 ruling. So scenario 1 describes here how a subcontractor outside of IR35 simply submits an application for payment, which is then certified and eventually paid by the contractor or the client. In this scenario, deductions involved are as per the current guidelines, in other words, CIS and potentially other deductions such as retention, CITB and so on. Scenario 2 describes a similar process, but this is more simplified with a purchase invoice sent by the subcontractor and a subsequent payment made by the main contractor or client. But again, the standard CIS deductions will apply. Deductions may be displayed, of course, on the certificate or invoice, but only accounted for once the payment is made. The main difference comes in scenario 3 here, where the subcontractor is deemed to be an employee or inside IR35. In this scenario, payments aren't processed via the subcontractor ledger, as this will attract CIS deductions, and instead tax and NI should be deducted as if they were a subcontractor, or as if the subcontractor were an employee, So in other words, processed via payroll. So this could be an opportunity to collect a timesheet from the subcontractor, which is used to calculate live updated job costs, work in progress, CVR reports. And following a sign-off or an approval process, the timesheet can then be sent into payroll, where tax and NI is calculated, RTI communicated with HMRC, and a payslip created and sent to the subcontractor. So 3 fairly simple scenarios here for you to think about. As I say, some systems may deal with this in a slightly different format, but it's certainly food for thought. I've noted here some of my final thoughts, which have really come to me whilst researching the IR35 legislation, and I thought it would be worth sharing these with you. So firstly, 2 ledgers for employees and subcontractors creates that clear separation and clarity between which of our labour force are inside and outside of IR35. We could look at this potentially as an opportunity, Potentially an opportunity to gain live accurate job costs as well. So I'll just expand on this a little bit. So as we know, often there might be a time lag between work completed by a subcontractor, an application for payment or a purchase invoice being submitted, and that creates a reliance on commercial teams to provide manual cost adjustments via a CVR process, whereas modern technology would now allow users to create and submit timesheets in real time, resulting in real-time accurate job costs. It might reduce any wranglings and negotiations with subcontractors between applications, payment certificates, potentially with the issuing of PLS notices, and also less of a requirement to create accrual journals for unbilled work which has been completed. Modern technology allows timesheet data to be captured via mobile devices and approved through configurable workflows. So that could also be something that's worth considering to help streamline some of your processes internally. And additionally, as described earlier by Jessica, you may be required to keep records of status determination statements, and therefore a system which allows you to attach documents to subcontractor and employee records could also be another plus. So just a few thoughts there from me. That's my very simplified summary on how construction accounting software could potentially be used to help you with your on and off payroll processing. At Equitu, we cover many similar topics on fortnightly webinar series, so I'll leave that slide on there for a couple of minutes if you're interested, but in the meantime, I'll pass you back on to Jordan.
Thank you so much. Thank you for that, Anthony. That's really great. I'll just switch this off so everyone can all of our presenters could turn their cameras back on, we can jump into the Q&A. Bro, we've had so many questions come in, I think probably because of such a great amount of content there. But one of the ones that's come through a lot so far that I'll start with is there's been a lot of questions about what happens if there's a contract spanning the 6th of April. How does that work in with the new rules? Jessica, did you maybe want to start with that? And if anyone wants to pick up off the back, we can do that.
Yeah, absolutely. So if you, based on what Matthew outlined, if you've determined that the contract does fall within IR35, then the new rules apply from the 6th of April. But the key here is that it's work carried out on or after the 6th of April. Even if the contract spans across the 6th of April. So it's only going to be those payments that relate to work carried out after the 6th of April, which will potentially need tax and NI deducting. And that also means that you may make or receive payments after the 6th of April, which won't fall under the new rules if those payments relate to work carried out before the 6th of April.
Okay, bro, is there anything anybody else thought we needed to add on that one, or does that cover that point off? Bro, okay, so then another question that we've had is how do you know if the contractor is deemed as an employee? How do you make that determination? Anyone want to jump in, or would you?
Yeah, I'll jump in on this one. So there's a number of different ways of approaching this. I think the first thing, as Jessica mentioned in her presentation, you need to get all the information in about that worker and what role that they're doing, and then you apply the status determination tests, which involve things like mutuality of obligation, control, integration, financial risk. There's loads of different elements to that to work out if someone is a deemed employee or not. And there are also a range of tools out there to help you through that process. Jessica mentioned CEST, HMRC's check-in employment status for tax tool, which is on gov.uk, where you answer a series of questions about the worker and the work that they do, and it will give you a determination as to whether HMRC considers that person to be employed or self-employed for tax purposes. the added benefit with CEST is HMRC say that they will stand behind the result if they agree with the answers that you've provided. In the tax dispute sphere where I operate, we've seen HMRC quite liberally disregard that. So take that with a pinch of salt. If it suits their purposes, they quite often don't adhere to the CEST result. But it's a good starting point. There are also commercial tools available in the marketplace, or you can work with advisors such as solicitors, accountants to help you work out the determination through that process.
Brilliant. Okay, perfect. And another one that we've had come in here is, what happens if a business is currently operating in what would be classed as a small business, but that's going to change? How do they have to, plan and evaluate for the upcoming changes?
Yeah, I can take this one. So again, assuming that the contract does fall under IR35 as opposed to CIS, it'll depend on whether you're using the simplified test or not. So if you're unincorporated and therefore using the simplified test, you'll need to start applying the rules in the tax year following the calendar year in which you meet the simplified test. So if you say had turnover of over 10.2 million in 2021, then you'd start applying the new rules from 6th of April 2022. So this is assuming you're not meeting the criteria as at 6th of April 2021. If you're incorporated and therefore following the normal small company criteria, then you'll need to have met the criteria for 2 consecutive financial years, and then you'll start applying the rules in the tax year following the 2nd financial year. So it can be a little bit tricky to navigate and work out.
Okay, brilliant. So one of the other questions, well, we've had a series of questions sort of asking for some clarification around some definitions of the terms that were used during the presentation. So we might do a bit of a quick fire and just reel a few of them off, if that's okay. First one that came up was personal service company. People were hoping that might be able to be explained a bit, if that was okay.
Yeah, I'll take that one, shall I?
Yeah, you're nodding along there. It seems like you're ready to go.
Yeah, no problem. So a personal services company has no legal meaning. It's a colloquial term used to describe a limited company. It's a term that HMRC use. So basically, it's a company where the worker providing, so John Smith working through John Smith Limited, has a material interest. So looking at their shareholding in a limited company, it's more than a 5% shareholding, or a person connected to them, so their wife, their partner has, or children, or whoever the connected person is, has at least a 5% shareholding. So the threshold's quite low. But if John Smith has an material interest in John Smith Limited, John Smith Limited is obviously your standard limited company, but the colloquial term is personal services company, which basically means this is a limited company that's caught by IR35. So it has no legal meaning. You won't find personal services company on Companies House. It's just a limited company and a term that we use shorthand to describe someone caught by IR35.
Brilliant. Okay, next one is intermediary, which is I struggle to say with my Australian accent, so apologies on that one. Does anyone want to jump in on that one?
This might be another good one for Matthew.
Yeah, no problem. So intermediary in the context of IR35 basically also means the personal services company. So effectively that entity, so John Smith working through John Smith Limited. The reason we use the term intermediary is because IR35 doesn't just apply where you've got a limited company. It's by far the most common structure. Probably 90% plus of cases, you've got John Smith working through John Smith Limited. That could also be a limited liability partnership. It could be another sole trader. There are lots of different types of intermediaries out there that align with the different types of corporate structures that there are. But it's basically where you've got a worker providing their services through another. but by far the most common one is the limited company, the personal services company. So intermediary and personal services company can, to a larger extent, be used terms interchangeably.
And one more, and I might just put this one right to you, Matthew, is end user.
Yeah, so end user is probably actually the most difficult of all the concepts. Sometimes used interchangeably with end client or clients. You'll find those three different terms used even within HMRC's guidance. They fluctuate between those three different terms. It's the person who receives the worker's services. And as I said, in complex supply chains where you might have John Smith Limited, an agency or a subcontractor, and then a main contractor, it's not always clear who the person receiving the services is. There's guidance and examples on gov.uk under the IR35 guidance, but as I said in my presentation, the end client is the person who most looks like an employer in the situation. So if you've got a main contractor and a subcontractor, who is the person who directs and controls the worker, who tells them what to do, and where to work and all the rest? Who is the person that's responsible for that worker? If it's the main contractor, then they're most likely the end client. If it's the subcontractor, so the one sitting between the personal services company and the main contractor in my example, then it could be them. But the simple point is end client is the person at the end of the supply chain, the one who's receiving the worker services.
Brilliant. Okay. And so obviously this applies to private sector companies, but we've had a few questions coming in about joint ventures between public sector and private sector authorities and how IR35 would attach to those sort of projects and those sorts of contracts. Is anyone able to speak to the point? Matthew, I can see you nodding.
In short, that's a really complicated answer that probably needs to be looked at on a case-by-case basis. So you've got two regimes. You've got the public sector regime, which applies in the public sector rules that came in, there's a list of companies and entities that count as public sector entities. And then on the private sector rules, you've got everyone else. You need to look at the structure of the JV and work out which set of rules it sits in, but that's something to look at on a case-by-case basis. But I think that the key take-home point is from 6th of April, everybody's caught. So I think the question as to JVs is really only relevant in the run-up to the 6th of April. Come 6th of April, the rules will apply as per public sector to private sector as well.
Brilliant. So then there's also been some obviously all of you have mentioned that there is like a wealth of resources out there for people to start looking at. There have been quite a few questions coming in about recommendations of things that people in particular, obviously you've outlined some, but if there are any specific pieces that you think are really important for people to take a look at in the lead up to April 6. Jessica, I can see you nodding along there as well. Do you want to go first and then we can swing around?
Yeah, I mean, for me, the best place to start is .gov. They've really ramped up their guidance in the last kind of few weeks and months. And there's a lot there, and it can be difficult to navigate, but they've put in some good landing pages to help you work through that. So again, I said it before, but I think the key really is working out what is your role. Once you've kind of nailed that, it'll be much easier to work out the guidance that's relevant to you as well.
Yeah, I'd echo that. On gov.uk, they've got some really helpful documents. One in particular that I like is they've got information sheets, news articles and things that you can send to the workers themselves. And they've got some really helpful flow diagrams and they've got illustrations, and it's put in really simple terms so that the workers themselves can understand what's going on. And the social media content on there in terms of drafts that you can use, those resources are really helpful. I think the other professional services companies, fieldfisher.com, for example, we've got a page dedicated to IR35. There's all types of articles and content on there. Other services companies as well have content like that. That's a great resource, and articles. For example, we've got one on the interaction between CIS and IR35, covering the bits that we talked about today. So those kind of resources as well.
Brilliant. Anthony, I know you obviously mentioned that webinar series that you're involved in. Is there anything else that you'd recommend for people?
Yeah, I would just echo what Jessica and Matthew have mentioned, really, in terms of actual advice on how you treat your subcontractors. Should really be managed through professional services companies or through .gov, HMRC themselves. But we do provide, from a software point of view and a processing point of view, we provide the advice on, once you know how to treat those employees or subcontractors, how they be processed within the software solution. So, you can use resources such as online help guides, technical support for your provider as well should be able to provide you with that sort of advice.
On that point, Anthony, we've also had a question come through asking sort of what sort of time frame do you think people need to sort of have to get this on the practical side up and running? Like, when does that all need to be started to go into place?
It's a difficult one, to be honest. So it depends on the scenario, your own personal scenario, and what systems you have in place. You could depend on the size of the company, the deployment of solutions that you need. Implementation of systems can take anywhere from days to months, to be honest. I would say it would be something that you want to be looking at immediately. That would be my recommendation. Okay,
brilliant. So then there's another question here. Sorry, the questions keep coming in, so they keep scrolling down, and I have them marked up. Another question we had is, where do umbrella companies or agencies fit in those supply chains? What do they classify in as? Are they intermediaries, or are they one of those other roles that we discussed? Matthew, I can see you nodding along there.
I don't mind. I can pick that up, or Jess. It's up to you.
No, I think from the legal perspective, Matthew might be better answering this one. I would have thought it can be case by case, but yeah, I'd say over to Matthew.
So this is the murky world of all these different tax rules. So that there's agency tax rules sit separately to IR35, and also umbrella service company tax rules sit separately to IR35, and so you've got different regimes that apply. If you are contracting through an umbrella services company or an agency, in most circumstances they should be deducting PAYE on the payments made to the workers. There are exceptions to that, and some umbrella service companies and managed service companies are better at operating the rules than others, but in most of those circumstances PAYE should be being applied, which means that obviously that you're not within the IR35 regime itself, but it's again a complicated topic that's probably another whole seminar on that alone.
Yeah, we have so many questions coming in, only a little bit of time left. So I was thinking, one of the things, and to everyone out there who is asking this question, I can answer this one. Yes, this will be available on demand via the same link that you used to get in here today, because yes, as has been flagged many times, there's a lot of information to absorb, and it means you can look through those slides again. So I can answer that one. So everyone who's asking that, we can tick that one off. But I thought what might be great is if everyone could just give us maybe the top 3 or 2 things that you would like someone leaving today's webinar to walk away with, and then if there's any more questions that come in that sort of trail off those things, we'll quickly jump on those and then we'll sign off, because unfortunately we're not going to get to everything that everyone's asking, but we will try and pass as many of those questions on to the appropriate people as possible after the webinar. So Jess, do you want to go first?
Yeah, I feel lucky going first. I might steal the others' points. So as I've said many times, absolute number 1, understand your role, where you sit in that labour supply chain. Once you've done that, you're halfway there in terms of understanding your responsibilities. Number two, I would say preparation. As Matthew said in his presentation, it's completely manageable, it's completely doable, but it really is about the preparation. So just because the rules kick in on the 6th of April, there are still lots of things you can be getting on with now in terms of segmenting your workforce, understanding where those rules apply, and starting to do those kind of status determinations. Obviously, they'll need looking at again if anything changes, but a lot of that work can and should be done in the run-up to the 6th of April. Again, HMRC, so .gov.uk have some really good articles about how you can prepare and what you should be doing now. So they're my 2 key points.
Bro, Anthony, do you want to go next?
Find the mute button there, apologies. Yeah, absolutely. I would encourage people to, obviously there's a lot of information to take in, as you mentioned, Jordan. There's a lot to consider here. One thing that's really important is how you manage this information. So once you've been through this process, how do you process this data, the timesheets, the payments? Just consider your processes, consider the systems that you have in place, and consider how you can automate that process as much as possible.
Brilliant. And Matthew?
I think the first point I would just strongly echo what Jess said about understand your supply chain. Before you can do anything in terms of working out whether you're under CIS or IR35, you need to understand who you're contracting with and the supply chain that they're involved in. That's the first fundamental. And if you, in terms of making IR35 compliance manageable, break it down into bits. Don't get overwhelmed by the whole process. Just think the first thing I need to do is work out my supply chains and understand where I've got personal service companies, off-payroll workers involved in my services, and that's the first key bit to do. Two further quick takeaways. One is IR35 compliance isn't just a one-off thing. It's something you need to be thinking about all the time, and diarise regular reviews every 6 months, every 12 months, because as I said, things change, and Jess mentioned about the small company exemption can change, workers can change. Every time new workers get involved, you need to be thinking about this in the same way that everybody's got used to with the CIS. When you're taking on a new subcontractor, you're checking that they're registered. All of those checks and things that you do, you just need to add on IR35 to those processes. And the final piece from me is don't forget about the employment law aspect of this as well. This is all a tax issue, but the tests for employment are very similar between employment law and tax law. And issues can arise with workforces. If you start, as you'll have seen Uber in the Supreme Court this week, if you start telling people that they are employed for tax purposes, they will start following saying, where are my employment rights as well in terms of backdated holiday pay and everything else. So it's important not to just think about this as a tax compliance exercise. You need to think about the wider picture.
Brilliant. Okay, I think we might have to leave it there. There's so many questions that I just don't even feel right trying to pick one out to round off the last minute. So I think I might just sum it up there. Wanted to thank all 3 of our panelists today. It's been such a great conversation. There's been such a high level of engagement. I think it's really an issue that people wanted to hear about. And so I think everyone will have gained some really interesting insights today. So thank you to the 3 of you, first of all. I'd also like to thank Sage for sponsoring today's session. Let us have this great conversation, which I think everyone in the audience has found really insightful. I'd also love to thank all of our audience for their great questions and being so engaged, and reiterate that, yes, you'll be able to access again. It's via the same link. It will still be free. Feel free to share that link with others in your businesses as well, because they can register after the event and still see it on demand. And we can tweet that out as well via all the building social accounts. And finally, I want to flag up that on Monday, Building's running a webinar with the Construction Leadership Council on kickstarting construction's role on kickstarting the UK's economic recovery ahead of the budget. So, and that could be another one that's worth joining. So yeah, that's all from me today. And I just wanted to thank everyone involved again, and goodbye.